In addition to Nikola, Lordstown Motors, and Canoo, Lucid Motors is the latest EV SPAC to be served with an SEC subpoena in connection with the merger of CCIV and Atieva, as well as certain claims and predictions. The Californian startup has given no assurances about the conclusion of the inquiry, but the company is pledged to complete cooperation. The company's stock fell sharply when the news broke, but it recovered the majority of its losses by the end of the day. The probable form and specifics of the subpoena, the legal risk associated with it, as well as the high valuation and the prospect of a new capital offering, all enhance the likelihood of a negative outcome. And that is exactly what we'll be talking about in today's video. What may be the underlying cause of the SEC's inquiry? Is there anything Lucid has been keeping a secret? Keep watching till the end to find out. Welcome back to NewVehicleMedia, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar content. Comments are loved and featured in our upcoming videos. The Air sedan developed by Silicon Valley company Lucid Motors was just named the best automobile of 2022 by legendary auto magazine Motor Trend. However, the company's excessively optimistic financial prognosis is drawing the attention of regulators. The stock of the luxury automaker dropped after the company's HQ in California got served a subpoena from the Securities and Exchange Commission. An investigation by the government agency is seeking papers connected to the sale that brought the electric vehicle manufacturer public in July of this year. As reported by the Wall Street Journal, the startup is completely working with the Securities and Exchange Commission, whose probe appears to involve some estimates and assertions. Lucid Group investors have filed claims with the Shaw law firm, an international securities class action legal firm, alleging securities law breaches. In search of the next Tesla, financiers interested in SPACs are looking for electric automakers. Despite the success of projects like Fisker, SPAC venture capitalists have had to give up short-term returns with others like Nikola. Companies that choose the SPAC route generally feel more comfortable highlighting future estimates of significant growth, such as those they anticipate to see in the next several years. In a standard IPO, the firm is constrained to promoting its prior success, which is not always the most compelling selling point for early companies with nothing to show for it in terms of sales or earnings. In the case of Lucid, John Coates, acting director of the SEC, believes that the SPAC investigation will raise important investor protection considerations. These include issues such as liability risk, which is frequently greater, and safe harbor assurances for forward forecasts, which will likely be a focus of the subpoena. In order to sell the acquisition, SPACs often disclose forward-looking financial statements and valuation benchmarks. Forward predictions are made by the SPAC, which is defined as a business that has various sets of forecasts that are predicated on plausible assumptions and depict alternative possibilities of how the firm's future may develop. Whatever the liability structure, it would be in trouble if it solely provided positive estimates while omitting disclosure of equally credible but negative projections. There were concerns regarding Lucid's ability to meet short-term objectives despite the fact that its forward-looking predictions for deliveries and revenues were consistent throughout filings and presentations. But the attractive entry pricing in investor presentations seems to pose the greatest legal and liability risks. As of February 19, CCIV's shares were trading in the $50 area, with the stock closing at $52.94 per share, reflecting a value of over $84 billion. This is a significant departure from the $11.75 billion valuation utilized for Lucid's stated favorable valuation and benchmarking strategy. That $10 to $11.75 billion valuation was impossible for investors to acquire shares at, so they were instead encouraged to think that they were getting a piece of Tesla for about 10 to 12% of the price, and that has caused the concern for the investigation. Despite the fact that Lucid has made public all of its forward predictions throughout the fiscal year 2026, the company has also projected some intriguing growth rates as well as maximum growth estimates for both income and deliveries. The business anticipated that it will generate $50.8 billion in revenue by 2030 based on sales of 547,000 units. However, year-over-year growth rates are predicted to be just 0.9% to 4% by then, ignoring the fact that such high sales are enormous when compared to the original capitalization. Lucid expects to earn slightly over $5.5 billion or around $3.33 per share, considering no further issuance, which is not enough to justify their greater than 2.5x premium. The SEC subpoena filed against Lucid in connection with the acquisition, forecasts, and financial statements illustrates vulnerabilities connected with SPACs that are frequently neglected. Investors are at danger of being misled by SPACs that provide rosy projections with no discussion of the risks that might affect them, as well as examples of irrational exuberance due to the absence of third-party valuations. A review of Lucid's merger registration forms as well as investor presentations reveals that the company's initial value and financing have been altered on several occasions. Initially, the business sold itself for an extremely enticing entry price of $11.75 billion, a sum that investors at the time had no method of accessing. Even though such assertions were eventually withdrawn, the dangers to those investors who invested because they were under the impression that they were correct were not appropriately disclosed. A recent capital raising by Lucid, together with its current value of $60 billion and the accompanying execution, legal and liability risk, all point to increasing volatility and prudence at this juncture. The SEC is already looking into the SPAC transactions that transitioned Lordstown Motors, Canoo, and Nikola into publicly listed electric car companies. These firms' financial predictions and any assertions concerning the pre-ordered automobiles have been of special interest to a government agency which has been looking into these statements. Overall, the EV industry is seeing long-term growth due to increased adoption of EVs, yet some of the sector's newcomers, such as Lucid and Rivian, are being valued significantly higher than established counterparts while having nothing to show in terms of actual income. However, although investors are attracted to technology and long-term growth rates, it is important to remember that Lucid's internal estimates must be taken with a grain of salt, and long-term terminal growth rates below 5% would most likely indicate a thin multiple profile. As a result, stocks continue to be intrinsically dangerous and should be dealt with extreme care. In addition to having a high market price and revenue ratio, Lucid Motors also has the greatest opportunity of any viable EV maker to develop into this valuation over time. It's possible that Lucid Motors will be the latest craze since Tesla if it can stay out of difficulty and reach its forecast. The startup's value is high because electric vehicle investors have great hopes for the firm. I'm interested in hearing what you have to say on the matter. Do you believe that the SEC will give the go-ahead to the Lucid Group? Do you believe that there is a potential that the company may be fined by the SEC if the situation continues? Let us know what you think by leaving a comment down below. According to Z-Writer, although many of these electric vehicle firms may expand based on pure sentiment, he predicts that prices will eventually stabilize and go sideways, as they have in the past with other technology sectors. Therefore, for the time being, we should load up and ride the wave. That should wrap things up for today. Keep in mind that subscription is still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.